Hello, everyone. Welcome to VRIC Media, your most trusted voice in metals and mining. I'm your host, Darrell Thomas, and today we have the pleasure of interviewing Charlotte McLeod of Investing News Network, who serves as the editorial director as well as the host of the YouTube channel. I see her all the time at these conferences interviewing some of the best guests in this space. And so, how you doing today, Charlotte?
Oh, really good. Thank you so much for having me. This is going to be fun.
Yes, I'm looking forward to seeing you moderate panels or speak at VRIC coming up in January. So if you have not, audience, if you have not gotten your tickets, be sure to click the link that's pinned in the comments below. Charlotte McLeod will be there. I will be there myself. I will be giving a speech as well. So looking forward to connecting there.
Yeah, I'm also looking forward to VRIC in January, one of my favorite events, and not just because it is right down the road from our office.
Yes, yes. Yeah, Vancouver's kind of interesting. I tried to meet with some people that I'm connected with up there after leaving one of our studios, and I got lost and I didn't know where to park and everything, and I had to rain check on them.
Oh no, that's too bad. Yeah, it can be tricky to nail people down in Vancouver for sure.
Yes, yes. So just diving into the topics for today, I want to get your overall perspective on how are you viewing the U.S. economy? I mean, obviously you're in Canada, and a lot of the talk is around the U.S. economy because the U.S. is the reserve currency, as well as has been the dominant power for a long time. And so the U.S. markets and the Fed affects a lot of markets everywhere and economies everywhere. And so just curious in your perspective on the economy as you engage with guests from all different perspectives, and how are you processing the information that you receive and how are you filtering that? So what's kind of your views on the economy right now?
Yeah, I think that's a really good place to start. And of course, I'm not an economist, but hopefully I can draw together some takeaways from what I'm hearing from the people who I speak with. Overall, on the US economy, it feels to me like we are waiting for the other shoe to drop, but it also has felt like that for a while now, right? I think the general consensus that I'm getting from a lot of people that I talk to is that the US economy has held on longer than people expected. And I hear a lot about the warning signs that we're seeing. For example, inflation is sticky, and yet we have the Fed now lowering rates. I know the December meeting is maybe a bit of a question mark, but it seems pretty clear at this point that the overall trend is going to be down. So that seems like a precarious situation that people are concerned about. We have the jobs data in the US. I know for September, we got stronger numbers than people had expected. But then we keep getting these downward revisions. So who knows how that is going to end up panning out in the end. And then I'm also seeing these headlines surrounding layoffs, including at some of the big tech companies. So that also seems like concerning factors that we should note. I know for me as well, I'm sure you too are hearing about the massive untenable debt in the US. Also seems like a massive problem. So things are not looking good. And what it seems to be is that timing is just hard to nail down. And I wouldn't want to be one of these people who you and I are talking to all the time who have to try to make those calls on timings and predictions. I know I've been talking for years at this point about is a recession coming? What's going on? I think a message I've retained is it does take time for these types of scenarios to play out. So maybe that's what it is. Maybe we're just waiting and it takes some time for all of these big things that we see to become something that's more clear. Maybe one more point that I have taken away from conversations I'm having is the bifurcated nature of the economy, where you're seeing people who are at the top. They've kind of been doing well all along. If you have a job and you're making a good amount of money, you are probably insulated from the effects of inflation, higher prices, all of these issues with the jobs market. But if you're not, you're one of those people who is living paycheck to paycheck, like so many people are, then of course you're going to be getting hurt. And that's something I worry is maybe only going to get worse. So those are some things I would pull out.
Yeah. Thanks for sharing that. So obviously the tale of two economies is a important factor, and I think it ultimately comes down to a lot of multiple things. I mean, you have the deficits and the budget, which favors those who are like on fixed income. So in America, the Social Security, Medicare beneficiaries. A lot of times people refer to the baby boomer generation and such who get these cost of living adjustment raises every year and such. And so they are benefiting from many of the spending and such. And so that's kind of like one piece. And then you have like another side of the economy where, well, also the baby boomers have like, I think they own about 51% of the wealth and it's multi-trillions. And so that's another aspect as well. And just speaking generally, not every baby boomer has that. Um, but and then you also have like the folks that are coming out of like college who are like struggling to find jobs. Like I've been talking to multiple college graduates who are really saying that the job market is very hard, trying to find work and such. And then also, the lack of affordability to buy a home and such, and to keep up with inflation. And so that's kind of the things that I've been paying attention to as well. And so just thinking about the Fed, they're starting to pivot. Well, on December 1st, they're going to stop quantitative tightening, and they haven't mentioned when they're going to start easing or expanding their balance sheet, but they are pivoting from this direction that they've been on since, I think, 2022. And so I'm curious in your perspective there. I was doing some research on this and listening to some of Ray Dalio's points on the Fed is going to start stimulating into a bubble. And ultimately, that means that those that have assets are going to get more richer or more wealthier. And those that don't, are not. And so, just kind of thinking about the Fed's move and how is that going to play out for financial assets, and just if you have any thoughts there.
Yeah, I think that's another trend that has started to come up among the people I've been speaking to, that transition from quantitative tightening into potentially easing. And it seems to me, after the Fed said, okay, tightening is going to end December 1st, I started asking, all right, so when is the easing potentially going to start? And I think I'm not getting a clear consensus on that at the moment. At the New Orleans investment conference that we were both just asked at, I heard from Adrian Day, and he was saying he was kind of surprised that it hadn't begun already. Another interesting perspective I got earlier this week, I had Bert Doman on and talking about the tightening. He was saying, well, they weren't even really doing it properly before. So, is this even meaningful? So I don't know if I have too much to add though there. That's something that I am also interested in and trying to get some answers on. But it just seems like the timing is in question, and especially because we have the end of Jerome Powell's term coming up. I think that also kind of throws into uncertainty what the Fed may do moving forward.
Yeah, there's definitely multiple factors there. I mean, we have Supreme Court. They're going to be looking at Lisa Cook's situation, whether Trump can fire her. And I mean, if they rule that, the Federal Reserve is accountable to the United States presidents or government, then that could be like interesting for the markets, especially if Donald Trump wants lower rates and such, then, he can appoint whoever to that position that may be aligned with his line of thinking. And then also with Jerome Powell stepping down and then replacing Powell, and him potentially replacing Powell with someone who's more dovish, and Donald Trump has been saying that rates should be lower and such. And and you and I know this from just even in the sector that we're working in, lower rates are needed for many of these initiatives to bring back manufacturing, or all those types of things, right? I mean, if cost of capital is expensive in that situation, then it's going to cost a lot of money for them to be able to even drive some of those initiatives. And so just curious in your perspective on those two dynamics, the Supreme Court decision as well as Jerome Powell stepping down. Do you think that more dovish Fed governors could be appointed, and lower rates and easing could start around, because I think that's what, May of next year, I believe, when Jerome Powell steps down?
Yeah, I believe it is May of next year. So there's actually a good chunk of time left still. There's a few months anyway of Powell still left. Yeah, I would say, based on everything I've been hearing in interviews and things I've been reading, it seems almost guaranteed that the next Fed chair is going to be more dovish, is going to be somebody who is in line with what Trump would like to see, which seems to be lower interest rates. So that's a good question. Is there anything that could turn us away from that path? I'm not really sure. It seems like that is where we're going next year.
Yeah, for sure. Yeah, thanks for adding to that. So, as obviously you're in front of a lot of different guests and speakers and such, and so just curious, in how are you personally navigating these themes and trends, like for your own personal perspective? I mean, for me, like when I'm interviewing multiple guests, I do get, there's some guests that actually catch me, where it's like, okay, what you said, like, really just light bulbs came off, and then it kind of takes me down a direction. And so some of those themes and trends inform like how I navigate my own financial journey, my own investment journey and such. And so, are there any themes or trends from your work that are really driving how you're navigating your own financial journey?
Yeah, I think that is, it's a good question. And maybe a key thing to understand about me before I try to answer this is I'm a really risk averse kind of person. And I'm also a little bit of a perfectionist. And so I'm trying to let go of that tendency, because I know it can be quite damaging. But for a long time, that made it really difficult for me to get started on investing, because if you want to do everything right on the first try, it's totally unrealistic. And that was tough for me to get my head around. Also, I excused myself for a while from really, getting into the market and doing anything, because I was trying to save to buy a condo, because I wanted that, security of having somewhere to be. And I was like, well, that's good enough for now. I can just deal with that. So I think, though, I want to say during COVID, I think, like a lot of people, I started feeling like, wow, there are things that are really wrong with the world, right? And during COVID also was when I started doing more of these interviews and talking to people and getting a better perspective. Like, I've been at this job for quite some time, but that was when we really ramped up the online YouTube angle of it. So I was having a lot more of those kinds of conversations, and I still was very, very risk averse, but just based on what I was hearing, I was like, yeah, now I really need to start establishing that physical portfolio. I need to have gold. So I essentially put myself on a schedule, and I just regularly pick up the physical gold, and that it takes all the thinking out of it. For like, I've thought about it, and now it's on autopilot in a way, right? So that was super important for me. And also around that time, I thought, all right, I can get comfortable with those big gold and silver miners, the royalty kind of companies. I can deal with that. That is in line with what I'm trying to do. So I have exposure there. And actually, when the prices went way up last month in October, I was thinking, it's like, wow, I don't think I have enough. And just based on what's going on in the world, again, from the conversations I'm having, because what people seem really unified on, even though now I know prices are pulled back from where they were, everyone seems so unified on we're still in a bull market, right? This has further to go. This is not the end. So I kind of was almost, I don't know if I should say this, I was hoping prices might go down a bit more so then I could go buy more in preparation for what could be coming there. So maybe that's what I would say about what I've been learning from people. I don't want to destroy everybody's, thoughts of what I'm doing. I think sometimes people have the impression I'm sitting here with all these hot stock tips, and, I do hear a lot of interesting ideas, but you really have to know yourself and what you can handle. And that's just kind of where I'm at in my investing life.
The copper market, of course, is the biggest metal market on the planet, 200 to 300 billion globally of metal traded. Following majors around and picking up projects that they jettison can lead to great success in this business. Vizsla Copper, we're the team that brought you successes including ISO Energy and Vizsla Silver. If you want to learn more, you can find us at vizslacopper.com.
Okay, yeah, so just thinking of that framework, I appreciate you sharing that. It's important to know thyself. I mean, that's a famous, I think it's Socrates. I want to say, I don't know if it's Aristotle or Socrates, one of the two, but know thyself is important. And so just thinking about a point that you just mentioned, not having enough after the recent run up, that feeling of not having enough. And I had that same feeling, like I'm still actively buying. I was accumulating for a while, since 2020. That's how long I've been in this journey. And then, I got to the point where I felt like I had too much. And so I started to kind of liquidate. And then, but I still kept a core amount of metals. But then, I started, picking up again, started buying again, especially as, 2023 and 2024, like all of those years were passing by and gold started to move higher. And then even in the recent months where gold, ran up to almost $4,400 an ounce, I kept thinking like, dang, do I have enough? So it's always that question of like, do you have enough? And one of the reasons why I still buy is because the debt and the deficits just continue to increase. The dollar just continues to depreciate in value. And so for me, when I think about that, it's like, okay, well, what is the alternative? So I'm always looking at the alternatives, which I'm a generalist investor too. I have stocks outside of gold and silver miners. And I have other assets outside of precious metals. But I think about just, okay, what are the alternatives? And we know that this train, Lynn Alden, who's one of my favorite macro thinkers, she always says nothing stops this train. And so I just keep thinking about the train, okay, the fiscal deficits are going to continue to be blown out the water. I mean, interest expense. I was listening to a clip from Elon Musk on Joe Rogan recently, where he says like the biggest eye opener for him was the interest expense being more than the entire military budget. And, so thinking of dynamics like that, and that compounds on the reason why, one reason why Trump may want lower rates. But, when I think about that, it's like, okay, yeah, I don't think I own enough. And so, but I'm also processing that in two ways. One way is, having more physical. So I am diversifying my physical metals. So now I'm looking at a depository, a vault situation where I'm like, okay, now I can start storing metals somewhere else to diversify that risk. And then another way I'm thinking about it is okay, well, the gold mining and silver mining stocks are going to outperform the physical metal. And so I can build more positions there, even though some of those stocks are up 600% on the year and such. And so it's kind of interesting. But just thinking about not having enough, are you more buying more metals, or are you more buying more stocks, and how are you kind of navigating that balance? And then also, what are some of the driving factors of you feeling like you don't have enough?
Okay, I'll try to go in order of the questions. I would say for the physical metal, I try to just keep that on its steady schedule and not try to look at what is the price doing, because then that leads to overthinking and just, maybe you hesitate, or you're trying to be too cute with what you're doing there. So try to keep that steady. And yeah, I would say it's with the mining stocks that I'm thinking now, all right, maybe that is somewhere where I can get more exposure, which is why I was saying, maybe it would be nice to see prices come down a bit more, because you're right, they are up so much right now that it does become difficult to buy. And I guess going back to conversations that I've had with people who are following the markets much more closely than I am, they have been helpful, I think, in emphasizing, yeah, they are at these high levels, but what is the evidence that gold and silver prices are going to go way back down? What is the actual things that you're seeing that would make you think that would happen? And it's hard to pull those out. It really does seem like things seem to keep stacking up in their favor, which means that for the mining stocks, they should, even though they're doing so well, have further to go. And I think maybe what helps me as well is thinking about the generalist interest in the space, which we're starting to see, but it is, I think, I keep getting reminded it's relatively minor still. Okay, so that's the first two bits of the question. What was the last part, the third element of the question?
Yeah, the driving factors for you feeling like you don't have enough. Like,
Yeah. Sorry, that relates, I think, back to what you were saying. Do we see this situation resolving? Do we see things getting better? Not really. So if that's what you think, then how can you express that in what you're doing in your portfolio? So yeah, I think that's how I'm thinking about it right now.
Yeah. Appreciate that. You sharing that. So just thinking about the mining stocks. So I'm always like, I really like engaging with Don Durrett and Lobo Tigre as well. And both of them have like a lot of stocks like in their database and everything. And then, Don, like he'll post his picks on on X and such. And sometimes it's hard for me to get around. Like, it's like this company has moved like 600, 700%. Like the easy money has been made, like Rick Rule says. And so I always try to like stomach, like, okay, how much higher can this go? Am I putting money in at the top, and then then we have like a correction, and I'm down on my position significantly. Obviously, I could buy in and average down, but those have kind of been some hard dynamics to navigate for me personally, and just curious in how do you view that? I mean, because like when you look at the charts of the gold equities, even if you're looking at the GDX or some of the bigger miners, the tier one miners, and you see how much they've moved on a percentage basis this year.
Yeah, I agree. I think that is hard to get your head around and actually pull the trigger on it. What do I do here? I would say I find it really helpful. I talk to my husband a lot. I like to run things by him. He's not in the precious metals space, and he always really helps me sort through my thoughts, and he really trusts that I know what's going on, which sometimes I'm thinking maybe you shouldn't trust me quite that much, but he really believes that I know what I'm doing. So when we're looking at these kinds of things, I like to talk it through, and it can be, I think it helps me to go back and forth, and he'll be like, yeah, okay, it's up, but you believe that it's going higher. And for him, he's a much more decisive person. So if I give information like that, he's like, okay, well, it makes sense then, like what is the problem here? So I think, I don't know, having someone to go back and forth like that helps a lot.
Mm-hmm. Yeah, for sure. Yeah, appreciate that. Yeah, obviously, even when we talk to some of the guests, so sometimes when I'm talking with a guest, like, I'm kind of working through some of my own stuff, and I was like, hey, I want to ask them this, right?
Yeah.
Just because this is something I struggle with, especially when you've seen like the metal move significantly. I mean, being in this from 2020, and it sounds like you were in this earlier than me. I mean, obviously the pandemic happened, gold was at what, 1800 an ounce around that time. And I started picking it up, and then it went up to over 2000, was still picking it up, and then it fell. I watched it fall to 1600 and such, was still buying. To see it at $4,200 today, and then also measured in dollars, obviously, and then even to see silver hit $56 today. And I've been buying silver from anywhere between $17 and $30 for a while. And then now to see it at 56, I was still buying it. I bought some silver actually last week. And I've just been kind of thinking like, okay, this is hard. It's hard trying to buy at these levels.
Yeah. I think I agree for sure. And I think just for me, I like to balance, all the voices that we're both hearing from inside the sector and bring in some regular people. I talk to my dad a lot as well, and he brings a good kind of, he's really knowledgeable, just kind of, he's a person who knows a little bit about everything. So sometimes I also try to go to him for like that generalist idea and like, balance out. So yeah, just having people you can talk to who can help sort out what's in your head.
Yeah, for sure. So royalty and streamers, I want to dive into that a little bit, and we don't have to get too much into the weeds if just wherever you feel comfortable talking. So obviously we have, the big names, the Francos, the Wheatons, the Royal Golds, and then you have the mid tiers, the ore royalties, Triple Flag, and such. And then you have some of the smaller companies like the gold royalties, the Empress royalties, Elemental. You have multiple different, smaller companies and such. And so where are you kind of looking on the value chain there? Or are you more into like the bigger names, or are you going down the value chain? Where are you kind of positioning yourself there?
I am a big names kind of person, as you can probably tell. I like the secure and kind of boring things. And I have heard that size and scale is really important in the royalty and streaming space. So I would tend to believe that. Although I do think there's interesting things going on at that, mid-tier or lower level in the royalty and streaming space. So I guess I would say I'm watching with interest. I don't know if you've been looking at the Tether news, where we've got Tether, the stablecoin company, coming in and taking stakes in not just one. I thought it was only one, but it's actually multiple royalty and streaming companies. So there's that. I know there's consolidation in the space at that level. So I'm sure that could present opportunities, and maybe with companies coming up the chain and increasing in size. So I think it's super interesting for sure at all the different levels.
Yeah. I think Tether took a stake in Elemental Altus Elemental, and then also Gold Royalty and Metallo Royalty. Yeah. And so that was pretty interesting. And I think I'm trying to remember, were you at the Rule Symposium this year? Yeah. Yep, you were there. Yeah, I think someone from Tether may have been there. I was kind of catching Altus, Elemental Altus, in their corporate presentation, and I think they mentioned that. And so yeah, I've been definitely keeping my ear to the ground there for sure. And ultimately, I think, like, if I was to speculate and just kind of following the Tether CEO on X, obviously they're still buying Bitcoin, and they're buying gold significantly now. I would bet that they understand that the U.S. debt and deficits and the bonds that they hold are not going to hold much value, especially as the money printers come back on. And so I can see them hedging against that. So what interests you in royalty and streaming companies? So obviously we hear, mining is hard, right? It's a very technical business. I mean, if you're getting into geology and deposits and locations, and whether you're going from, developers to exploration companies to prospect generators to tier one miners and such, like it's a lot to learn, right? And it's a hard business, right? So obviously royalty and streaming companies offer a different approach and a different level of risk, but just curious, in like, when you were learning about royalty and streaming companies, what were some of the things where you're like, okay, this is a sector that I feel comfortable getting into?
I think you kind of hit the nail on the head with all the points that you just mentioned, the stability, security, the whole mining is difficult aspect and removal of risk. Maybe one point I would add that I always think is interesting. They tend to have a lower number of staff, right? It just doesn't take a whole lot of people to run these businesses. So yeah, I think if you put all of that together, including the points that you said, that definitely makes it appealing. If you're looking for that low risk angle.
Yeah. And, and ultimately, like, it does come down to like profitability, in terms of the G&A costs, which like you mentioned, the general and administrative costs. Lower staff means like, okay, royalty streaming, they buy a project and they're just moving like a filing system over to their office. And they don't require more staff for that or whatnot. And then you're able to like also see more clearly, like, okay, are they spending too much on administrative costs and salaries and stuff, because it's so there's only a few people on the team, right? And so you're able to assess like, okay, yeah, your salaries are too high, and so it was just raising up your G&A, and then you're able to like kind of measure whether you feel like that's a company that you want to invest in. And so it does offer that simplicity, and so that's why I like it as well. What do you think about royalty and streaming companies being like the financial kind of banks for mining companies? What do you think about that dynamic?
Well, I think it has definitely come to be needed, right? I guess from what I hear, financing is always, it's tough for the smaller companies to get off the ground and get the money that they need to move projects forward. So let me think a little bit about this. I think it is positive to have the royalty and streaming companies there providing that for companies, because we have to have exploration development happening, and we know that that's been underinvested in. But then on the flip side, maybe it's a little too bad that there's so much reliance on that. We'd probably like to see capital coming into the sector from outside the mining space. Probably it would also be positive to see the large mining companies doing more on exploration and development side. So I think, yeah, it's positive, and it seems to help companies move forward. But yeah, maybe it would be nice if it wasn't just, I know it's not just them, but it'd be nice if other pieces could play more of a role there.
Yeah, for sure. Yeah, I appreciate you engaging in this conversation, and it really, it's reminding me of it's reminding me of something in terms of like, this space is for everybody, hard money is for everybody. And regardless whether you're into, the safest bets or the riskiest bets, or, whether you're holding an ETF or whether you're holding the physical metals, I mean, obviously all of it has risk, right? But ultimately it comes back to like real money, and hard money. And so, I appreciate having this discussion. So I'm curious, and if you are only focused on gold and silver, or are you looking at any other metals or minerals, uranium, copper, you name it. Are you looking at any of those other metals?
Yeah, I think I need to, I am. Yeah, I'm trying to kind of figure out next moves. So I think we mentioned we were both at the New Orleans Investment Conference, and one of the things I was trying to do there is ask all the people that I was speaking with, what do they think is going to be the best performing asset of 2026? Because, we love to focus on precious metals, but I was really curious to see what else might be coming up. And of course, had a lot of people talk about gold and silver. That makes a lot of sense. But number 2 and number 3, and I would say they were tied for 2 and 3, were copper and uranium. I had a bunch of people saying like, these are the sectors to watch in 2026. So those are definitely on my radar, and I'm interested in how that could be done. I think copper is, I don't know how you feel about copper. I think I've been hearing about copper for years as a long-term story. So maybe, I think a lot of the time it was, you don't maybe want to be in copper right now, but later you will. So you could get in now and you can wait, that kind of thing. Now it seems a little bit like the narrative is moving forward for copper. For me, I still am wondering if that recession element is going to come back into play, which would be hurtful for copper. So that's kind of a question mark for me. I don't know how you feel.
Yeah. Let's dive into that a little bit. So I think that for me, like personally, I think like the copper story, obviously the recession risk, that's something that's been kind of like the dark cloud hovering over copper. And, copper's been in, I think it's at an close to all-time high right now. It's over $5 a pound. And is it $5 a pound or $5 an ounce? One of the two. Okay.
Oh, it's a pound. Yeah.
Yeah. All right, cool. Just making sure, I got that understood. Just it hovering close to all-time highs. And also, the recession, that's kind of just been the dark cloud over it, and it's been over it for years. And for me, it's kind of like, okay, well, if I'm waiting for this big washout, why don't I just invest in tranches? So what I typically do is, I will, if I'm interested in the thesis, for example, copper, we know that to power all of these data centers, the wiring that goes into the ground or the grids and such is going to need an immense amount of copper. And then, in addition, with it being a strategic mineral or a critical mineral list on the critical mineral list for the United States government, and these other dynamics of like EV vehicles and such, and just where the demand, like which we could compare to, like how silver has a increased demand because of its industrial use. Copper is having that as well. And what I've seen is like we have these AI companies that are, investing billions of dollars into the data centers, and all the capital is flowing into these AI companies is fueling this bubble. But they are going to need the energy that comes out of the ground, whether that's, they're going to need the metal copper for their infrastructure. They're going to need the uranium. They're going to need the natural gas. They're going to need the oil, and all of that. And so that's kind of like how I frame it and how I think about it. And so I do have positions in copper, and I think that, if the price falls, I will buy more. But I'm also like, managing that risk with position sizes. Like I'm not all in copper. So that's kind of been my take on it.
Yeah. That sounds like a great way to go. And the energy situation, it just sounds like we're going to need so much more energy in general. And I think that you're asking about uranium too. I know we're in a little bit of a breather time for uranium, and honestly, I need to go back and have some more up-to-date uranium conversations with people to understand where the market's at now. But I know we're waiting for the utilities throughout most of this year. So I'd be curious to, I think again, uranium sounds really good long-term, and maybe the question is timing if this year is like like some people are saying, at least, is 2026 going to be a good year? We will see.
Yeah, definitely. Yeah, uranium. I'm pretty sold on that thesis. Like I've been all in on that thesis for like, not all in investing wise, but I've been in on that thesis for like a number of years, since probably about late 2020. And one thing I've learned along the way, of while I'm waiting on this thesis to fully play out, because, we look at supply and demand and such, and like we know that there's going to be some deficits. We're already operating at a deficit, but those deficits are going to increase significantly in the later years of this decade. But when thinking about that, like, okay, when I'm positioning myself, one thing I've learned from like Rick Rule, like I've interviewed him multiple times over the years, so I've been able to see this kind of pattern. Rick will invest in a particular sector or stocks or whatnot, and he would find times where those stocks would get overheated and they would get significantly overvalued. They would exceed his targets for where they should be at that current time frame. We even saw that recently when he's mentioned that he's liquidated some of his gold equities, where he's like, I could de-risk my whole portfolio. And so one thing that I've learned from that was that, okay, there's going to be these times where uranium stocks are going to just rip and go really, really fast and really far, very fast. And that's just not a realistic move. Like we saw that recently with gold, right? I mean, gold moving up $1,000 in the course of 2 months, like, 2.5 months, right? That's not realistic for gold. And so, you, in those times, you can liquidate some of those assets and not get caught up into like the FOMO of like, not necessarily fear of missing out because you're in the position, but fear of missing more profits, And so what I've done, even with uranium, like recently, many of my positions were, they were just up. I mean, one of them moved 20% in a day. And so it's like, oh, yep, let me go ahead and sell some of this position. And then sure enough, it came crashing back down, not back to the lows where I was originally positioned, but a lot lower to where I could start accumulating more shares. And so that's kind of been how I've been navigating this particular sector, especially in times of like, mania and euphoria and such. And so, yes, it's been helpful. But, so back to Charlotte, do you trade a little bit, or are you more buy and hold?
I am a buy and hold person, but I think I'm growing to appreciate just exactly what you laid out there, especially after having all these conversations about the big move that we saw in October for gold and silver. And yeah, I think it's an important mindset shift to have, where you don't have to be in or out. It doesn't have to be all or nothing, right? Going back to, I also had that talk with Rick Rule about how he took some profits in the junior gold stocks that he had. And it doesn't mean he's exiting the gold sector and he doesn't like gold stocks anymore. It's taking advantage of that big move. So that's something I have to get better at doing for myself is, you can recognize that long-term trend is there and you want to be in, but you can also react to those shorter term moves. I think that's super important.
Yeah, for sure. Yeah, because I mean, and there's times like where I've like blown it, where I blew it, in times of not like blew like a fortune or anything like that. But I remember having that conversation with Rick, and I sold some of my positions that were getting overheated. And then I went and rotated it into some of the majors, and then the majors were falling too. They started falling. So like, for example, I got rotated into Wheaton. Wheaton was at about $112. It fell to like $94 and such. And so I was still buying at that point at 94, but I got in a little too early. I didn't take that kind of breather in between when I sold the position and waiting for the others to kind of move downward more. And so, I'm learning my lessons too, but Now Wheaton's back to, I think, 109 or in some change or something like that. So, getting back in at 94 and averaging down in that case, and then now it's back to 109. So, I'm not underwater. I'm in the profits, and so I'm in the green. But yeah, that's definitely something that I've been learning as well. So, just thinking about the just anything else that you may have any insights that you may have, like as far as what else are you thinking about, or what's kind of like some guiding principles that you're using that you could leave with the audience or whatnot as you're navigating this, and even navigating it as one thing that I've learned about you today is that you're really into like knowing yourself and your risk tolerance. That's important, right? For all investors. And within that, knowing your risk tolerance, that helps you decide where you're parking your capital. Okay. So you mentioned parking your capital in the metals, as well as, in the royalty and streaming companies, which are a lot less risk and more of the bigger names. Right. So that's helpful for people to know that. So anything else that you think, like another principle that you use or that you apply as you're navigating this space?
Well, yeah, I think you really hit the big one for me that I've tried to put into play, which is knowing yourself. Maybe the other one that I really like, and I'm sure everybody has heard this before, but I think it's a good one, is just also having an idea of your goals. That's part of knowing yourself anyway. But, when you are buying something, all right, like try to have some idea of what you think is going to happen so that then you can know when do you want to exit and that kind of thing. And honestly, still, I am working on that. And I think it's also still hard, even if you have that idea, to say, all right, I'm done. I'm going to get out. If, maybe if it is still looking good, maybe you want to readjust what you're doing. But yeah, I think just having an idea of what you're doing with which each element of your portfolio can be super helpful. Yeah. And if you put those together, then hopefully you'll get somewhere.
Yeah, for sure. Yeah, I appreciate that. And then just on the fly, what's one thing you've learned in the last couple of years where you're like in your investing journey and you're like, okay, I probably shouldn't do that again or whatnot, or it could be in a positive light where it's like, okay, that actually worked for me. I need to, probably do more of that.
Oh, okay. That's a tricky one. I would say, and this is more specific to myself, is, of course you should do your research. You should try to get your head around what you're doing, but at some point you have to pull the trigger, right? If you are maybe a perfectionist type of person like me, who's listening to people with all kinds of different opinions, you can get paralyzed by choice. And I know a lot of the audience is maybe out there listening to all kinds of different perspectives, and that's good, but don't do that so much that you're going to get impeded from doing anything.
Yeah, for sure. Yeah, that's what's called analysis paralysis.
That's a good one. Yeah, there you go.
Definitely that's really good. And I've struggled with that mostly in different areas, but like I mentioned, one of the things I learned is like, kind of waiting, after I take profits, waiting for, before jumping back in, is something that I've been learning. But then also, I think one thing that I've learned is even in having a mindset to manage risk, whenever I'm so convicted on something like gold, and I've been having this conviction on gold for 5 years, and I've done a lot of research, and it's kind of just trusting myself, trusting the research, trusting the people that I bring on the show, in a lot of ways. I mean, obviously that could be a slippery slope, but I have some really trusted voices that I bring on, and they're a lot smarter than me, in this particular sector. So, I think that that's something that I would probably take away. And the more conviction I have, the more I need to follow that conviction. And so, yeah, that would be something I've learned over the years.
Yeah, you put that in a very nice way.
Yeah, for sure. Well, Charlotte, you're on X. Obviously, you all have a YouTube channel and such. Where can people connect with you, find some of your work? Obviously, you're going to be at VRIC. So share some information with the audience.
Oh my goodness. Yes. So best place to find me is probably the YouTube channel. It is Investing News on YouTube. You can find me on X. I'm Charlotte_MCL. I am trying to do a better job at posting there, but I don't get on it as much as I should. We also have a website. It's investingnews.com. I think a lot of people know the YouTube. They don't know we have a website as well. And on the website, you can see all of the interviews, and you can also see all the rest of our content, which is news and educational content on the mining sector. So that's what I've got.
Yeah. Appreciate you sharing that, you all. Well, you all got the information. Be sure to click the link that's pinned in the comments below so that you can get your tickets to the Vancouver Resource Investment Conference. We love to see you there in person, love to engage with you. So, Charlotte, appreciate you taking the time. And until next time.
Thank you very much.